What's going on, and welcome back to another episode of The Mortgage Mindset. I'm your host, Trevor Otsuka. I am a licensed mortgage advisor with Barrett Financial Group, and I lend on commercial, residential, and private money for fix and flip. Today, we're rocking a solo show. We're going to dive right in here. Today is Sunday, March 29th, 2025. By the time you guys watch this, it will be Monday. We're going to go in here to the rates. So as of market close on Friday afternoon, 30-year national average for conventional is at 6.76%, 15-year fixed, 6.15%, 30-year jumbo at 6.92%, and then for 30-year FHA and 30-year VA, you are at 6.18% and then 6.20%, respectively. Let's take a look at econ data that happened just this week. So Monday, we had S&P Global Services Composite PMI that came out, S&P Global Services PMI for the month of March as well. Those were dropped on Monday morning. On Tuesday, you had a few let's see. You had a couple of Fed speeches. There was the Case-Shiller Home Prices Index year over year. And then you also had FHFA Home Price Index as well. Then Friday was the biggest day. So Friday was kind of paradoxical, right? Because we had core PCE month over month for February, and the projected forecast was for it to come in at 0.3%, but instead it came in a little hot. It came in at 0.4%. But even with PCE coming in a little bit higher than expectations, the bond market actually still rallied, and we had a nice little improvement on UMBSs and then also on the Treasury yield. So we can dive into that here in a little bit. Then for next week, we have April 1st, ISM manufacturing PMI is probably going to be a pretty big deal. And then on Thursday, April 3rd, you have S&P Global Services PMI for the month of March, and then ISM non-manufacturing PMI for the month of March as well. And then Friday, we have another non-farm payrolls jobs report with unemployment rate month over month for March. And then there immediately after is going to be a Fed Chair Powell speech. So typically when we're looking at these econ reports, non-farm payroll jobs report and unemployment, man, they have come in over the course of the last 2 years, and they have really shaken up the market. So it's going to be interesting to see what will happen on Friday. Friday will be a big day. That's April 4th. And we'll see. We'll see what's going to happen with the market. If we're going to get a rally, if we're going to stay flat, or if the market might tank a little bit, just depending on how these items are actually going to come in. Let's go over to this week's headline. So kind of interesting. FHA made a pretty big update in regards to loan eligibility for immigrant homebuyers. Okay. So I'm sure that if you guys have seen social media, you probably saw some loan officers that posted about this, and they basically changed the requirements for the citizenship status. So if you are a non-permanent resident, what that means, what type of visas can still be utilized, so on and so forth. So here's the title of the article. This is from Housing Wire. It says, "What the FHA's new loan eligibility policy means for immigrant homebuyers. Trump administration's termination of special purpose credit programs will also impact Hispanic borrowers," NARB leader says. So jumping in here, the first point is understanding the FHA's new policy change and its impact. The FHA's decision to eliminate loan eligibility for non-permanent residents represents a notable shift, especially impacting immigrant communities. Historically, FHA-backed loans have significantly supported Hispanic homebuyers, with nearly 30% of Hispanic borrowers using FHA loans in recent years. It's a pretty high percentage. For real estate professionals, awareness of these policy changes is critical to providing accurate guidance to potential homebuyers, especially in diverse markets. So if you guys do work with a lot of immigrant clients, probably going to have a little bit more detailed of a conversation of figuring out what is their current residency status, and if they do have visas, what types of visas that they have. So we can cross-reference that with the FHA guidelines to see what is eligible and what would get approved for financing. Point number 2 is potential effects on homebuyers' eligibility and market activity. This policy could reduce loan availability for certain immigrant households, potentially affecting housing market demand in areas with higher populations of non-permanent residents. Agents and loan officers should proactively discuss alternative financing solutions with affected clients, emphasizing the need for adaptability and awareness of changing lending landscapes. Point number 3, adapting your business strategy in response to changing lending policies. With the tightening of FHA eligibility criteria, real estate professionals may need to strengthen partnerships with lenders offering conventional, non-QM, or portfolio lending solutions that accommodate a broader range of residency statuses. Encouraging continued education for real estate professionals regarding diverse lending products can help better serve clients and maintain strong business momentum despite changing regulatory environments. So let's talk about this a little bit. If FHA is updating their guidelines and they are starting to restrict the immigration statuses that they'll allow and getting approved for financing with an FHA loan, that sucks, right? Especially for a lot of immigrant buyers that are purchasing property here. They call the United States their home now. However, there are still programs that are out there that they can utilize. So if they have, an ITIN, it depends on if they have a social security number in the United States. It also depends on what type of social security number that they have. I think that one of the statuses is that you are approved for work through DHS. So if you have that status with a social security number, then it just depends on what kind of visa that you have to accompany that. And you would be able to qualify for normal conventional financing. So it would just be structured a little bit differently. Instead of FHA, if you're a first-time homebuyer, you can come in with as little as 3% on your down payment. The interest rate might be a little bit higher than FHA, but if you have good credit on that social security number that you got assigned from DHS or with the eligibility to work provided by DHS, then you might have lower mortgage insurance premiums because they work a little differently than they do on FHA. So just keep that in mind. There are still options that are available for immigrant buyers. Even if FHA is restricting their policies just a little bit, then you can pivot. You can take a look at conventional. There's also options that are in non-QM, also known as non-qualified mortgage space. And that would be something like an ITIN as well. So if you guys have any questions about any of this information, if you need help, if you have clients that need a little bit of guidance, happy to connect. Let me know. Love to hear your thoughts on this and get your comments below. This is going to be on YouTube and then also posted on the podcast registry. So I appreciate you guys. I hope that you had an amazing week. I hope you crush it this coming week, and we will see you guys next week. Bye-bye.